All right, let's jump right into this urgent explainer because look, if you are a GST registered business owner, you have exactly 48 hours until the July 2026 deadline. And missing this one, well, it could permanently cost you money. Right now, there's a massive shift happening in the GST compliance world, and honestly, most business owners are completely unaware of just how strict the rules have become. We're looking at a brand new reality for your GSTR-3B filing for the June 2026 tax period. This isn't just another routine monthly filing where you can, just let your accountant figure it out later. Absolutely not. Today, we're going to look at exactly what's on the line, what you need to check before you hit submit, and why making a mistake right now will lead to a permanent loss of your working capital.
48 hours, guys. That represents a hard cutoff. After this time passes, certain input tax credit claims are just gone forever. We aren't talking about a scenario where your claims are postponed to the next month or where you can just casually adjust them in a future return. Gone literally means gone. If your ITC isn't claimed correctly and locked in right now, you're going to be paying that tax liability out of your own pocket. I mean, just think about that for a second. Real cash leaving your bank account simply because of a missed step in a compliance portal. Let's break down exactly why the system has suddenly become so incredibly unforgiving.
Section 1. The threat. Understanding hard locking. Let's see how this builds into the new reality of GST filings. So the crucial point here is that unlike the old days where you could casually adjust input tax credit errors in the next month's return, hard locking means your mistakes are now completely permanent. The GST network system upgrade has fundamentally changed the architecture of the portal. Previously, if you realized, oh no, I missed an invoice, or I underclaimed my ITC, you had a bit of breathing room. You could amend those figures later. Well, not anymore. Once you file this GSTR-3B and that specific amendment window slams shut, the portal freezes those numbers in stone. It's written in permanent marker. You cannot retroactively increase your ITC claims. Any errors in your ITC absolutely must be detected, analyzed, and corrected before this hard lock kicks in, because there is no second chance.
Now, why is this so critical? Because input tax credit constitutes roughly 60 to 70% of a standard manufacturing or trading business's gross GST liability set-off. Just process that for a second. More than half of your tax bill is usually covered by the credit you get from your purchases, meaning getting locked out of those credits translates to a massive permanent loss of actual cash flow. To put that into perspective, if your gross liability is 1 lakh rupees and you rely on 60 to 70,000 rupees of ITC to offset that, a hard locking mistake means you suddenly have to find that 60 or 70,000 in hard cash to pay the government. For a small or medium business, that kind of unexpected cash outflow is absolutely crippling.
And that brings us to the number one question business owners are panicking about right now. They're asking, I've made the purchases, I've paid the GST to my vendor, but what if my suppliers haven't filed their returns? Will my ITC still reflect so I can claim it before the hard lock? It's the most common pain point, and frankly, it's a very valid fear. You're basically relying on someone else's compliance to secure your own cash flow. So let's break down exactly how you need to verify your credits in the system right now to protect yourself.
To answer that, we've got to stop confusing these two forms. On one side, you have GSTR-2A, which is a dynamic statement. It updates in real time as your suppliers slowly file their returns. It's like a live feed. But, and this is absolutely crucial, your ITC claims are now strictly governed by the static GSTR-2B. This document is auto-drafted and generated exactly on the 14th of each month. It basically takes a snapshot of all the supplier returns filed up to that specific date, and then it freezes. It literally does not matter what happens on the 15th or the 16th. If it wasn't there by the 14th, it's not in your 2B.
Which leads us to this unbending rule. You can only claim ITC that appears in your GSTR-2B, period. If your supplier hasn't filed their GSTR-1 by the cutoff and that invoice does not show up on the static document, you cannot claim it. If your books show you have 1 lakh in ITC but your GSTR-2B only shows 80,000, you can only claim 80,000. If you try claiming that missing 20,000 just because you know you made the purchase, that is a guaranteed way to trigger an audit, a notice, and a demand order from the tax department. This means you need to be actively chasing your non-compliant suppliers right now, immediately, before that hard lock kicks in on your end.
All right, moving on to Section 2, the defense, securing your ITC. So how do we protect your cash flow in the next 48 hours? You need to get hands-on with the newly operational Invoice Management System, or IMS. This system was launched in late 2024, and it's basically the ultimate gatekeeper for your credits now.
Think of it as a 3-step defense. Step 1, log into the IMS. Don't skip this. Step 2, go through the invoices your suppliers have uploaded and you actually have to take action. You either accept them, reject them if they're invalid, or mark them as pending if there's a dispute. Step 3, only the invoices you have directly managed and verified in the IMS will correctly auto-populate your final ITC into your GSTR-3B return. If you skip this and just blindly trust the auto-populated numbers, you're leaving your business wide open to errors that are about to be permanently locked.
Section 3. The pitfalls. Common GSTR-3B mistakes. Let's rapidly run through the absolute worst mistakes you can make right now. The single biggest red flag? Claiming unreflected ITC. As we just went over, if it's not in your 2B, do not claim it. It's the fastest way to get audited. Second, not reconciling your books with the portal before filing. You have to know exactly where the mismatches are. Third, confusing the dynamic 2A with the static 2B. Then there's the issue of ignoring nil GSTR-3B returns. I hear this all the time, oh, I had no business this month, so I don't need to file. That is completely false. A nil return is still a mandatory return. Fifth, leaving perfectly valid ITC on the table simply because you didn't check your IM's pending invoices. And finally, the ultimate trap, assuming amendments are always possible. That mindset might have worked in 2023, but in July 2026, it's going to cost you dearly because of hard locking. Section 4. The fallout, missing the July 20 deadline. So what actually happens if the clock strikes 0? The financial penalties for missing this hit really hard, and they hit fast. Late fees start accruing daily. For a nil GSTR-3B, where you literally owe 0 tax, you are still penalized at 20 rupees per day, up to a maximum of 500 rupees. If you have a tax liability, boom, that jumps to 50 rupees per day. But the daily cash penalty is just the tip of the iceberg, honestly. Failing to file your GSTR-3B creates this massive compliance cascade. Eventually, it leads to restrictions on your ability to file your GSTR-1 outward supply returns. And what does that mean? It means you can't pass on ITC to your own buyers, which absolutely destroys your business relationships. Now let's say you do everything right. You reconcile your GSTR-2B perfectly, your ITC is totally accurate. But here's the final catch. Is your electronic cash ledger fully funded? Even with perfect reconciliation, if your ITC doesn't cover your total liability, you have to pay the balance in cash. If you're having cash flow issues and your electronic cash ledger isn't funded by the deadline, you simply won't be able to successfully file the return on time. The portal just won't accept it, which means those cascading late fees we just talked about, they start ticking away immediately. So with just 48 hours left on the clock for the July 20 deadline, there are no do-overs. It is time to pull down your GSTR-2B, jump into the IMS, and reconcile right this very second. Do not leave your working capital to chance. If you have any lingering GST questions, drop them in the comments below so we can help you navigate this mess. But as you log in today, I want you to ask yourself, are you truly ready to lock your ITC forever, or are you about to end up paying your own taxes twice?